Top of the show, the Dow was down 16, hasn't budged a point. Still down 16 with less than an hour to trade before tomorrow's July jobs report. Where are the experts seeing money being made? Let's get right to the floor show. Traders at the New York Stock Exchange, CME Group, and the NYMEX. Ben Willis, the expectation is a gain of 185,000 jobs. This, to me, looks like a frozen market. That's what I said at the top of the program. People are too nervous to take a stand either way.
Exactly. The only thing we're really seeing right now is hedging positions against the anticipation of the range of about 180 to 200,000 and a drop in the unemployment rate to 4.8%. But that being said, this market has been stuck. We were in an overbought condition. The market started to work that off. We needed to get to about 21, 25, 30-ish. We started to trend that way and stalled. We're now in no man's land from that point of view. So you have the money, the high frequency or the quantitative money sitting on the sidelines ready to be reinvested. So that's a bullish indicator. There's money sitting ready to go to work, but we haven't gotten to those levels yet.
There's got to be,
and that's the problem.
But Alan, there's got to be some money to be made here. You've got 81% of the S&P 500 companies having reported. By the way, we have a big earnings report day after the bell with Activision Blizzard and Priceline, lots of moves here. So is there any money to be made at the moment for the smart money that you see transferring across the floor of the CME every day?
Well, looking at the commodities markets, oil may have put at a bottom. Now, it was a bit premature to call that last Friday when we made new lows and closed higher, but that has happened now. And if September crude gets back above 43, I don't want to take the thunder away from the oil analysts, but that could be that was the midpoint of this larger overall action we've seen in 2016. The real wild card is the dollar. Are we going to raise rates again in the near term or not? There's a 12% chance in September, which seems higher than what I would think, and a 40% chance, by December. So the dollar is really the focus, and it had turned over, so that could be helpful for the markets overall to break out of the sideways range. Really, we're trading not only sideways right now, but sideways for the last 3 weeks in the S&P between 2160 and 2175.
Jeff, he did steal a little bit of your thunder, but let me thunder down on you, because that's what you and I always do. It's the Grossman-Clayman show all the time when we talk about this, but look, we saw a decent move in oil today. It came back out of bear claw market territory. It certainly is up about 2 1/3% in the aftermarket session. But I have to tell you, Iraq production announced that it's at its highest level since January, 4.6 million barrels per day. I'm going to say it again. Do not get caught in this fake bull move here. I mean, I just don't believe it.
Listen, that's why we have a market. The truth is, no, I'm not looking at everything through rose-colored glasses here.
Right.
When I told you the market was going to break down around 44.5, we went down to about 39.5, 39.20 at one point. We've now retraced, like I said, your previous man just said, about halfway, and now we've got to really consolidate here and work here. I'd have to say we're going to have a lot of work before we can take out, let's say, that resistance level, which is about 44.5. But again, I'm still positive on this market. I really don't see, anybody getting really very aggressive on selling this market. I know you do, but you've been bearish for about the last $15.
I know, exactly. If you hate it at 45, you'll really hate it at 41. Listen, it's great to see all of you guys. Ben, Alan, Jeff, thanks so much. It's our only floor show. Be sure to tune in.